This is Eric Muathe, Muathe.com. It's February 24th, about 5 minutes before the market opened. I think the Dow futures are called to open about 20, 30 points higher. We'll see how that holds for the rest of the day. We are right here. This is the S&P 500 1-year daily. We are right here at support, so the market does have to prove that it can bounce. It has to give us a strong day or two out of these lows here for us to have some kind of conclusion that we need to put the retest behind us, or we need to break it so we can know we can move on. So we are right here at a seminal point where those who had gone short are taking off their shorts. Those who want to go long are going long, and everybody's getting confused. Shorts are taking their profits early. Longs are being clobbered when they go in. So there's some, at the point of turning around, there's a lot of confusion for both sides of the argument. So the market still holds this support, and boy oh boy, if we hold and we start moving, the farther we move from this double bottom, if it holds, the more you're gonna hear calls for the end of the bear market for now. And we might get a meaningful bounce. I'm talking about 20, 50% from current levels. And for that reason, I personally took all my 401ks and people around me and put it back in the market yesterday. And the reason being that since before the summer we got out of the market, but I think after this huge drop from last summer, and assuming it's a big assumption, it's a huge assumption, and of course I don't know, but if this holds on the S&P 500 and we start moving out of this range here, then we might have a meaningful rally, and I want to be part of that on the long side. Okay, the market still remains, still needs to prove that it wants to stop the carnage. Otherwise, we are still gonna see lower prices until the market proves it's found a flaw somewhere. The market will decide. We can decide for the market. Also, one of the reasons that I think this might hold. Now, if you take one of the markets that giving me pause and reason to consider, at least give a consideration to the market being strong, is a Chinese market. And the reason being that if you consider the 13 week and the 34-week EMA moving averages, when they intersected here on a bearish cross, the market fell from 4,500 all the way to under 1750 right there, right? So this intersection by the 13-week EMA and 34-week EMA is a long-term trend change. And right now we see the possibility, it's a possibility that we might get a cross in the Chinese market. Should that happen, that's a huge change. And like I said, you never know, these lows might hold. The market might find a flaw around current levels, and we might be setting up for a huge move. One market worldwide is showing us the potential for that happening.